revenue expenditure. Okay. Revenue expenditure is fundamentally means those expenditure that are for the purpose other than creation of physical and financial assets. Other than physical or financial assets. So earlier we saw capital expenditure happens when government creates an asset or reduces a liability. But here revenue expenditure is not like that. It is majorly the maintenance expenditure, okay, for normal functioning of government departments. It can also be as the salaries of government staff, okay, the various civil servants that are being managed by the government. You spend money on them. The members of parliament's expenditures and the houses, all those things are maintenance cost of running a government, okay. Even the interest payments that government has to do, not the loan component. When you repay a loan, it is capital expenditure, but when you repay the interest part, it is revenue expenditure, okay. And grants, now since government is expending it, so grants and aid given to state government, PSUs, okay, union territories. So all these things fall under revenue expenditure, sorry. I hope these points are clear to us. Let us quickly go through what all we covered in this session. We talked about revenue expenditure, how it is different from the earlier one we studied. Then before that we discussed what is revenue receipt, something which has nothing related to a liability or an asset, but they are majorly what government receives in the current financial year, okay. Maybe the tax amount, the various kind of tax that it collects, the dividend, when the government is providing you a service, the fees that it charges, okay. So yeah, and then we covered before that capital expenditure. So the two major part of it is either reduction of a liability which is from past by you are repaying loan and reducing it, or you are expending it to create an asset for the country. So that is how capital expenditure undergoes. And then we understood what are capital receipts, which either when you receive money in such a form that it is either creating a liability or reducing your asset, okay. When you have granted a loan, it is an asset for you, but when you are recovering that loan, your asset gets reduced, okay. We use this particular example for our understanding. So I hope you can watch the video once again if it is not clear, and then we introduce the classification. We are going to have this much discussion in today's session, and in the next session we will talk about the various kinds of deficits. Thank you so much.